Welcome to the Cresco Wealthcast. My name is Dimitri Karolis. I'm the host of the pod, and I'm also an advisor within the Cresco Wealth Management team. Just want to say a quick thank you to all of you that continue to support and follow the channel. I appreciate you, and of course, welcome back. And if this is your first time to the podcast, thanks for stopping by, and I hope you enjoy. At the Cresco Wealthcast, the inspiration was very simple. I wanted to bring topics that were derived from real conversations, and I wanted to do it in a way that was relevant and relatable to you. And a lot of the conversations and the content that you're going to hear, it's coming from clients, it's family, it's friends, it's just being out and about and having those real conversations. Nonetheless, I hope you enjoy, but before I let you go, just want to let you know you can find us on LinkedIn, Facebook, Instagram, and YouTube. Just search at Cresco Wealth Management. Until then, enjoy the pod. Oh, and by the way, that music you're hearing, that's Pete Ems. He's one half of Small Town DJs, and it was nominated for a Juno Award. He's on the team, no big deal. Welcoming back Dr. James Thorne, Chief Market Strategist, Wellington Altus Private Wealth.
Let's do it, baby.
Let's do it. So we were talking in the last podcast, if you've listened or not, and I said, you know what, we didn't go down the Bitcoin train. And then as soon as we stopped recording, Dr. Thorne goes, you know what, hit record again, we're going. So this is good because we get a lot of Bitcoin talk, whether it's in the news, whether it's to clients, there's exposure to the portfolios. I think if you say people that have been talking about Bitcoin even a calendar year ago to today, it's different stories. What I'd like to achieve today and directing the conversation is more so, okay, what are we really looking at when we're talking cryptocurrencies and Bitcoin? Because I still find people are stuck at the face value of whether the name of it. Sometimes I say the biggest disservice Bitcoin has is being called coin or having that name in it, for example. But blockchain, Bitcoin, crypto, what are we really looking at when we clear all the smoke? Give your heads a shake. We're moving in X direction.
So, okay, let's go back to the 12th century when zero was brought from Asia to Europe. And I'm being very general, so if I'm missing the dates, I apologize. You introduce zero, and then what you do is you introduce a new number system, right? Remember, back then, all the number system was Roman numerals, and they used the abacus. You basically take zero, and then you basically introduce what's called double entry bookkeeping accounting, which is what we get taught in high school. That was a massive innovation. Okay, you apply that to the printing press. Okay, and what you had was a massive transformative movement because you had a brand new accounting system that countries and companies would use, and those people that used this type of new system, which started in Florence, Italy, by the Medicis, right? Those countries that could basically match liabilities and liabilities and assets, right, controlled the globe and grew. Bitcoin is the biggest innovation. Blockchain is the biggest innovation since double entry bookkeeping accounting was introduced in the 15th century for record keeping. It is a decentralized distributive ledger that does not need to be reconciled.
So we're talking framework. So we say we're starting at infrastructure, technological infrastructure of framework.
This is it. It is the bet. Okay, so stop. Let's put that on that shelf there.
Sure, okay.
Next step. The internet that we are using now and talking on now was developed in the 1950s as a backup communication system in the event of a nuclear war between the United States and Russia. It was never designed to be the backbone of the global economy. There are weaknesses in it that need to be addressed. Right. Those weaknesses are addressed by blockchain, which is also an internet protocol. Let's put that up in the shelf. So we've got massive innovation in bookkeeping that we haven't seen since the 15th century. It's bigger than double entry. Go read The Reckoning. Go read some historic, what happened to the Florence, in terms of what happened when France was the country that embraced, or the royal family of France embraced double entry bookkeeping accounting, and how they basically grew and dominated. Okay? Then you have, it is the solution to a lot of problems. Milton Friedman in the late 1990s said there needs to be digital money. We're not there yet. The first iteration, the white paper of blockchain, it started in the 1990s. It's been worked on with the cyberpunks and what have you. There was a paper that came out in the 1997. It came out of the NSA, and it talked about digital scarcity. And guys kept working on it. Okay, then we have global financial crisis. And in the middle of the global financial crisis, this individual named Satoshi Nakamoto drops a paper, and it's basically Bitcoin. So the first use case of this new accounting system, which is also a new internet protocol, was Bitcoin. And it had the unique aspect of having perfect digital scarcity, in that there was only 21 million of them. And it also had the unique aspect that it grew naturally, holistically, by individuals hooking up computers and transitioning and transacting amongst themselves.
So I want to stay on that key buzzword that you use, transacting. And I think a lot of times people may amalgamate all these concepts. So to go back and say Bitcoin is the first iteration, as you say, of how the transactions and the transacting happens. It's not the infrastructure. It's not the framework. It's not the internet protocol. Is that fair to say, or are we missing something in that statement?
The first use case of blockchain was Bitcoin.
Perfect. Okay. Yeah.
There are other use cases. So listen to what Elon Musk wants to do with the U.S. government that has not been audited. If the U.S. government was on blockchain, there would be no failed audits. There would be no need for reconciliation. If there was a $5 million sent somewhere, we would know exactly where it would be. It would be completely and total efficiency. That's where we're going. And if you have individuals that benefited from not being able to pass audits, maybe there would be pushback. Hypothetically speaking, of course.
Of course, hypothetical.
Hypothetical. Yeah. So you've got, what's the hard part about it is you can sit there and see, look at what we've got here in terms of the innovation, right? So Bitcoin was the first iteration of it. It has got perfect digital scarcity. It was not invented. And then what we did was, let's invent it. Let's do this iteration on we'll create this new iteration on the blockchain. And then what we'll do is we'll issue a bunch of coins, which are called initial coin offerings, ICOs, right? And we won't have any digital scarcity. So there can be a multitude of different types of blockchain type platforms. And if you think about it in terms of the evolution of software, because that's what it is, that's what the internet is software. What happened in the 70s and 80s with software is we all had private software. And we ended up with open source, didn't we?
That's right. Yeah.
And it's so it just seems.
I was going to bring up cloud and cloud computing as are we far off to even use that as somewhat of an example of how an evolution takes place in this transformation? Like if we were able to adopt the cloud and the computing and enterprise server integration, why are we so off to reject or be harsh towards a blockchain?
It's very interesting because when you think about where we are, when I sat there and I say we have we have a level of wasted inefficient. We can no longer continually print debt. We have reached the end of the road.
Yeah.
The can no longer be kicked down the road. That's what Bissett and Trump are saying. You can't have deficits of 7% and you can't have debt to GDP of 125%. They have to change. Europe has to change. China's got more debt. Japan's got more debt to GDP. We've got to stop the insanity. Well, what is the best way of doing that? Well, the best way is for governments to become more efficient. What's the best way to get the governments more efficient? Put them on the blockchain. Right? The Pentagon has failed 7 consecutive audits. If you put it on the blockchain, there's no way an audit can be failed.
Right.
So that's that's where we're going, okay? Now we've got Bitcoin. What is that? To me, Bitcoin is it's digital gold. It's a store of value. It can be used as money if you want. How is it going to evolve remains to be seen. We joke about going back to the future, right? Well, if we got into the DeLorean today and we went back, we'd go back to 1993. I would honestly sit there and say when Al Gore, and it was Al Gore, who basically allowed the internet to become a for-profit entity. And then we all sat around saying, how are we going to make money? Well, there wasn't really, we had this period of time, we had a bubble, but we really figured out that how you made money is you had these things called walled gardens, and we sold your data to advertisers. Right? That's what Meta does, right? There was one company like Amazon that figured it out. That was it. But think about it. So what happens? That model is broken. Right? So why is it that Google and Yahoo, not you Google, but everybody is going so crazy in terms of CapEx when it comes to AI, which is a different theme, is they understand how transformative the period is, and if they don't innovate rapidly, they will cease to exist. I still have a Yahoo ID, email ID, like AOL. Like they understand that it's innovate or die.
Yeah.
But let's go. So let's get it right down to why do I find it really important now? And I really think that one of the unintended consequences that what the internet has done and what we've gone through in terms of the excessive levels of debt, I think people have recognized the fact that when Nixon took the United States off of the gold system, we closed the gold window, which he said was just going to be temporary back in the early 70s. Money supply has grown on average between between 8 to 9% a year, which means, Demetrius, when you're doing a financial plan for your clients, you've got to grow that portfolio by, let's just say 8%, just to keep the standard of living constant. And I think what's happened is around the pearl, people have recognized the fact that the fiat-based monetary system that was developed after World War II, Bretton Woods, is no longer sustainable. Then you add on debt at Napoleonic War levels, and then let me ask you, I think the real forcing function here is what Yellen did and Biden did to Russia during the Ukrainian war, which was Russia had, I'm going to explain it this way, Russia had an agreement with the United States. We are going to lend you $300 billion, and you're going to pay us interest. And they bought a U.S. Treasury, which was a legally binding contract. Janet Yellen and Joe Biden basically did not live up to the contractual obligations. And there are unintended consequences for that. Everybody in the world saw that. They weaponized the U.S. dollar, the SWIFT payment system, and U.S. treasuries against Russia. Everybody outside of the United States went, Today it's Russia. Tomorrow that could be us. And they started to diversify away.
Mm-hmm.
When you think about it commonsensically, wouldn't you do, if you were advising, you were an economic advisor to a royal family in the Middle East, wouldn't you advise them to diversify some away, to diversify the risk away, right? Today we're their friends, maybe not, right? And so what did you see? You saw people not wanting to buy U.S. treasuries. Think about that. This isn't about eliminating the U.S. debt. It's about making it sustainable. And yet our clients, our potential clients, no longer want to purchase it.
Right.
What are you going to do?
Where do you go?
Where do you go? What do you do? And so now I'm paraphrasing, like I am,
Yeah.
we're just thinking about, it's very interesting what the treasury, so the thing that I am very comfortable with and what Mr. Trump did, President Trump did, is he nominated Scott Bessent as the Treasury Secretary. He's a superstar. He's also the first openly gay Treasury Secretary, right? Which doesn't matter, but I want to bring that up. But it doesn't matter. He worked for George Soros. He was there with Druckenmiller, who's another legend, with Soros. It was, from what I've read, it was their idea to basically attack the peg of the pound to gold, right?
Yep.
This guy has market experience like you wouldn't believe. He also taught history of economic thought at Yale. He knows all this. Do you understand? So if we were sitting there having a cup of tea as we are right now talking about it, he would go, yeah, right? And so when he talks, he wants to set up I want a strong US dollar based monetary system.
Isn't it, correct me if I'm wrong as we're talking about this, then suggesting that the way to protect the American dollar, oddly enough, is through the adoption of crypto.
Yes. And Paul Ryan wrote about this in an op-ed in the Wall Street Journal in the middle of last year. And let's be clear, Paul Ryan and Donald Trump don't like each other.
They don't see eye to eye.
But
That's
Paul,
for sure.
but Paul Ryan, one of his best friends, Paul Ryan's from Wisconsin, senator from Wisconsin, became the vice presidential candidate with Mitt Romney, right? One of his buddies is Mark Andreessen. Mark Andreessen, who's, what do you call it? He's an unpaid intern with Doge, but he developed Netscape. Like, Mark Andreessen is one of the smartest guys in the world, and how do you come out of this? What you want to, like, the terminal, the fancy thing is we've got to make the US dollar neutral, which is another fancy way of saying we've got to basically peg the US dollar back to gold or something like that. Right? And the way you do that is you do that through what's called, and this we went through this before this morning, right? Is if you open up a digital wallet with somebody, right, and you transfer $5,000 Canadian into that digital wallet, that institution should go through an AML KYC process, an anti-money laundering, know your client process, that says the money's clean. And in that period of time when that money gets clean, that $5,000 gets converted into a blockchain type software, like a representation. Yeah. That's called the stable coin. If you go and you legislate that stable coins have to be backed by US dollars and US treasuries, like, think of a money market fund, right?
Yeah.
And Bitcoin goes to $1 million, then by definition, the size of the stablecoin market, because what happens, we buy Bitcoin today at $85,000 US, and we transfer that, and then what happens is Bitcoin goes to $1 million, and then we sit there and go, Dimitri, I think we should sell. And you go, yes. We sell that $1 million, right? Bitcoin, it gets transferred into what? $1 million worth of stable coin, which what does what? Increases the demand for what? US dollars and US treasuries.
So I've said this for a while, and maybe if I'm on the wrong track, correct my course. I'm sure the listeners would love this as well. As I've always argued and said, the principles in which someone invests in gold nowadays are no different than the principles that someone invests in crypto. And all that ends up happening is if you look at, I've always viewed it to say, if you look at what gold, cash, money market represents, is a segment of the market. Crypto replaces that segment. So it's nothing new, it's just something that looks different. But so am I a little bit off in what I'm saying?
No, you're absolutely right. And I think the difference is we have to change our point of view and think about individuals that don't live in North America that may want to live in areas of the world that are politically charged, where if you have a couple of $1 million in Bitcoin, it's on your phone and you can leave. Mm-hmm. Gold's really heavy. Right, and so the thing that's very interesting about this narrative, it is now getting told. I've been following Bitcoin since 2012.
Yeah.
This narrative that I have been built up, I was asked to look at it because of my former employ. We had a bunch of folks that were very global people that were very, very wealthy, that got caught in the Cyprus banking crisis.
Gotcha. Yeah, very
where their I'll pick a number where their $5 million US was bailed in, which means it became a part of the capital structure,
yep.
And they got $5 million worth of the new Cyprus bank in equity.
Yeah.
That was not cool, and everybody ran around trying to figure out what to do. These cool kids, they bought Bitcoin back in 2012. So you're seeing the natural evolutionary process of now it's coming to retail. Now it's coming to institutional as a store of value or as an asset class. But yet at the same point in time, people are recognizing, given what's happened, is that it's now part of the solution to our debt problem, which is making debt sustainable, which means why will people want to buy U.S. or creating demand for U.S. treasuries?
Gotcha. And if there's not as high demand on the U.S. treasuries, as long as the contingency demand is tied or correlated to the U.S. treasury, the U.S. then becomes fine. So you say you didn't buy direct U.S. treasury, but that crypto allocation or that blockchain allocation that you have, as long as we have that backstop where it can get reintegrated.
Right. What have we done? We've gone to the United States has been backed. And like so in the 70s when Nixon, and this is all hindsight, right? This is all hindsight. Sure. So in the 70s when Nixon closed the gold window, the story goes that Dr. Kissinger cut a deal with the Saudis, basically saying, you can trade oil. We're not going to argue with you on OPEC. You do what you need to do, but you need to trade oil in U.S. dollars and recycle the earnings or the winnings back into U.S. treasuries. So we developed what was called the petrodollar market. All of a sudden, we created a demand for what? U.S. dollars and U.S. treasuries, which was the big risk, right? Because what happened in the 60s is de Gaulle showed up at the port of New York with a ship full of U.S. dollars saying, where's my gold? Because according to the Bretton Woods agreement, you could hand in your U.S. dollars whenever you wanted, and it would be converted instantaneously into gold. And isn't it interesting that finally they're starting to chat about auditing Fort Knox? And Dimitri, I think the gold's there. But I think on a larger scale, what you're starting to see people talk about and percolate, going, we need to make this debt sustainable. The previous administration made a critical error, rightly or wrongly. Here's the way out of it. And the way out of it is going to be accepting Bitcoin. There are now sovereign wealth funds buying Bitcoin. I think there are states that want to have their own holding of Bitcoin. There are companies that are putting it on their balance sheet. Well, think about it. They have changed the accounting standard so that if your company bought Bitcoin at, let's say, $25,000, and at the end of the year it's $250,000, you can basically mark up that once a year, and then all of a sudden your balance sheet explodes, doesn't it? What also is happening? Custody. So you've seen big money-centered banks like JP Morgan and Morgan Stanley saying, we'll custody your Bitcoin. Not only will they custody your Bitcoin, they'll give you a line of credit for it. Bitcoin has now become collateral, which is, think about that, that's real estate, right? So you're seeing this evolutionary process happen. And at the same point in time, there needs to be a new, I call it Bretton Woods 2.0, for lack of a better label, where we make the U.S. debt sustainable, and it has to be palatable for people to want to feel that the U.S. dollar is backed by something. So is that gold and Bitcoin? I mean, there's a guy named Sachs, who's the crypto czar and the AI czar for Trump. They're working on that. I mean, Senator Loomis is having a committee meeting today. Well, it's on Wednesday. Is it Wednesday today? Wednesday
Today's
today.
Wednesday,
In
yeah.
Washington, D.C. about this. The wheels are starting to turn, right? And so what I say is it's a store of value. Take it seriously. It's not for everybody. If you don't want to own it, that's your choice. But then what do I keep saying to you guys is look, there are three groups. There's those that make it happen, those that watch it happen, and then the majority is saying what just happened. What we've done by just this conversation is we put you and me in the what is happening group. Yeah. Whether or not you want to position yourself personally or put it into your client's portfolio, that's up to you, Dimitri. That's sort of the lay of the land of how I see what's going on.
And it's really good because and thank you, because the essence of the conversation is to say, look, let's not get caught up whether it's at 85K USD right now, goes down to 79, goes up to 96. Let's not get fixated on certain things, because behind all this is to understand what's actually happening with the adoption. Infrastructure overhaul on a technological level for the way in which we commerce and transact that has been done before, and now we're doing it again out of necessity. And so eye on the prize is that we're going through a digital transformation.
Yes.
And these are the iterations in which we started. So his point, AOL, Netscape that you said, just because maybe those didn't pan out, so to speak, doesn't detract the fact that the internet is a thing and became a thing.
You're absolutely right. And so when people ask me, is Bitcoin the eventual winner? I go back to the exact example that you're using. And what I say is, I can remember in 2003 with Google, it was, well, there's Dogpile, there's Ask Jeeves, there's this, there's that. And the lesson that was learned there was Google was what Wall Street coalesced around.
Yes.
And so that's what I would say is Bitcoin. The other thing that I would suggest to you, and this comes from the head of BlackRock, Mr. Fink. And, you know, when Mr. Fink changes his mind, you pay attention, right? Okay, largest asset manager in the world. He sits there and says the next iteration is this is going to be digitization of assets, right? Your ownership of your car will be digitized. The title on your house will be digitized. Your art collection will be digitized. A private company will be digitized and will be able to trade on an SEC approved exchange, so you can have all the advantages of liquidity of a public company, but all the advantages of being a private company.
Bingo.
That's the next iteration of blockchain that's not tied to Bitcoin. And I would say to you, the New York Stock Exchange and ICE, right, which is the Intercontinental Exchange, which these are the guys that brought commodities to the masses. They're already there. So this is, the table's already there, like the poker table. So you know, this is all about, and what is this about macro? I keep saying to you, that's so hard. It's not about identifying the theme. It's about timing. This is from Ray Kurzweil, who's a futurist. You guys want to read any of his books, you know, on the singularity. But you know, what does he say when you hear him interviewed? It's not about identifying the theme. It's about the timing, right? And it really looks like the timing of this with the embracing of Mr. Trump. And remember, for the last 4 years, I would suggest to you, during the Biden administration, the evolutionary process of Bitcoin and blockchain, more specifically, has been hindered. Because, what did I just say to you? Where is it going to be disruptive? It's in the financial services industry.
Of course. Yeah.
So are you surprised that the Fed slowed this down? Are you surprised that, you know, choke point 2.0, right, where people in the crypto industry were unbanked, right? They were forced, right, by the Consumer Financial Protection Fund that was run by Elizabeth Warren and financed by the Fed. All this is now starting to come out, right? Gary Genslinger of the SEC, you know, what he would say is, I'm not telling you what to do, wouldn't give us any rules of the road, but Dimitri, you digitized your asset and all of a sudden you got a lawsuit. And so everybody would say, well, if I don't, he's telling me not what to, he's not telling me what to do, and then I think I'm doing the best given the gray area, and I get slapped with a lawsuit from the SEC. That's, and I'm paraphrasing, and I'm being very general, but at the same point in time, there's been a lack of innovation for 4 years. Trump is going to start that innovative phase back up, which is so now we've got AI, and we got blockchain, and here, let's go to the next step. AI is going to be about robots talking to each other. How are they going to transfer value? Blockchain. You can see it happening. Yeah. And so it's all about timing. And as long as you're there, so yeah, it's great. Do you want to have it in your portfolio? That's up to you as an individual. Given your risk profile, it's highly volatile. It went to 110, down to 85. But if you take this view, and you understand that this is like, we're back in Florence, Italy in the 15th in the 15th century, and this is what's happening, then you either make a determination of whether you want to basically have a piece of that evolutionary process or you don't. And you make an openly conscious decision about how it is. And if you say no, God bless you, right? But what have we done? Right? We've had the conversation. And if you don't want to, that's fine. You know, not every stock is for everybody. Not every asset class is for everybody. You know, you may not want it because you don't need it to achieve your financial goals. Yeah. Right? Your job, I'm into capital preservation. So I've already made as much money that I need. I'm more into wealth preservation for my future generations. Maybe you want to, maybe you don't. But what we do is we've had the conversation. Yeah. And I've tried to frame it in a very macro 50,000 mile view with historical context, and then just remember, it went from 108 to 87, and nothing's changed, and nothing has changed. That's Look right. At the volatility. You want vol? It's you want a stock an asset that can go up 1,000. 100%. And here's the other thing. The last thing I would say to you, going back to put it into historical, more context that we talked about before. we need to reflate. We need to get liquidity back into the system. It's happening. M2 in the United States growth is positive. M1 growth in China is positive. Interest rates are coming down. But yet global growth is slowing. And I tease you because I keep showing you guys stuff. Oh, look, this person's now saying growth scare. So what asset class works? What asset class, let me put S, plural. What asset classes work when global growth or cyclical growth slows, but liquidity is increasing?
There you go.
And then you can go
There
on
you go.
you can do your treasure hunt by yourself,
Yeah.
right?
And it's there. You're absolutely right. I like what you said. You the common theme when you say the economy is not the market. And the point of this is when we talked about overarching is a stock can say one thing. A sector can also say another thing. And they deserve separate attention. And so I thank you for your time.
Can I just ask one last thing?
Of course you can, yeah.
Why Wellington is so unique is we can actually have a conversation about this.
Yes, 100%.
And you can opt out. Like, so nobody's forcing, Dimitri, nobody's forcing you to buy Bitcoin for your clients. You understand?
Mm-hmm.
But there are institutions in this country that you're not allowed to talk to your clients. If your client phones you up and said, can we talk about this? Hey, I would like to. I've done my own work. I would like to be able to purchase some. You can. So the point is, what we try to do here, what my job and what we do at Wellington is, we talk about these things.
Yes.
It may not be suitable for you. I am not advocating, to be clear, I am not advocating for you to buy it. But what I am saying, let's have a conversation about it. Let's put this into historical context. Let's not say it's a scam. Let's not say only, what do we hear? It's for money laundering. It's only criminals, which is exactly what we heard with the internet. Let's have an honest, objective discussion about it. And if you want to participate, that's up to you, not me.
Well, and and that's the scam and the only for criminals and all of that. Okay, maybe there's a facet, but everyone eye on the prize. When the SEC and BlackRock and companies up here that are transacting and finally issuing these, whether they're exchange traded funds or how they, look what's happening. It's there. It's adopted. It's being adopted.
There is a big, going back to the sovereignty question
Yeah.
about Canada. It's funny, I have family members that have been heads of big U.S. corporations up here in Canada. And we laugh is because you look at the company in terms of size or in terms of contribution to the top line, to the North American market. And it's maybe not even top 5, top 10. But the reason why you do it is because we're a self-contained You're a self-contained company, and if you blow it up in Canada, you're not blowing up the mothership, right? There are big U.S. institutions right now that have a product that they're beta testing up here that you can purchase in Canada. Asset allocation, ETFs, that have allocations to what? To Bitcoin.
Yeah.
I'm not going to name the company, but it's there. It's happening.
And this is what I'm saying. Point in case
Yes.
is all of that. If the financial institutions that go through the know your client, anti-money laundering, all of the safe checks, are adopting the very thing that someone would say is counterintuitive to all that, the writing's on the wall, everyone. It's just a matter of timing. It's just a matter of when can we integrate it? When is it ready? When can we profit off of it as well? Right? And so the market, it dictates.
So what has Trump done? His proposed leader of the SEC was highly involved in I won't say indirectly, but let's just say on an advisory position to what was happening with ICE and the New York Stock Exchange in terms of getting their platform ready for tokenization of assets. So now you've got somebody that is not blocking innovation. So now it's the invisible hand, creative destruction, you know what I mean?
Yeah.
And so that innovation is going to be unleashed. It's going to be very interesting because I don't foretell the future. So okay, now we get creative destruction happening, right? And regulation is not going to hinder the rate of evolution of this technology as much as it has in the past.
Yeah, I agree with that. Well, thank you very much. And to your point, Wellington Altus, Cresco Wealth Management, we can have these conversations. It's okay to talk about them. They're there. They're there to be had. And we don't mean to be motivated to say, oh, well, we better tailor this conversation the way it sees fit because someone is telling us or directing us on how we have to have these conversations. We're here, and you're a breath of fresh air, Dr. Thorne, because we can just talk about it and see it and bring it all on the table for the purpose of making an informed decision for clients, portfolios, financial plans. Everyone is a little bit different. So again, to reiterate, we're not professing sell all, go buy Bitcoin. What we're saying is this has many aspects to the game. Let's look at it for what it is before we isolate what the use case is and think that that represents the whole thing. We're talking infrastructure, technological overhaul, digitization, things that we're seeing before us, artificial intelligence. This is what we're looking at. Its use cases as it goes through economies and having those. So we can continue to have these conversations. You can reach out to me directly. We'll be doing this again over and over. I think we should probably do a bit series, every so often, just to, as something comes up, because again, a lot of clients have been asking about this, Ryan, and have these conversations.
Well, just to finish off what you're saying and what's interesting, the reason why there is so much volatility is because there are too many individuals that are using leverage to purchase Bitcoin.
Okay.
One, and two, aren't buying into the long-term thesis and think that it is a get-rich-quick scheme. And with those type, we call them tourists or macro tourists,
Yeah.
They get flushed out. So what have we just seen? All these folks that are short-term in nature, they get flushed out. What do the long-term people do that own it? They understand that 30% drawdowns are normal course of business in this infant product because of but if you look at it on a macro sense, that's it. Now this is highly academic, okay, but in infant asset classes where you can make a lot of appreciation in your investment, this is the normal course of business. It's highly volatile because you get people coming in here and trafficking in these stuff with leverage and they don't understand it. And next thing you know, you got 30% corrections. And the people that understand the long-term thesis, they just sit there and they keep stacking.
Yeah.
So they look at this and go, if you don't like it now, after it's gone from 110, generally I think 108 to 85, and you can't handle that volatility, it's not for you. And if you don't see that pullback as an opportunity to add more, what the term is keep stacking,
Yeah.
then it's not for you. And then what will happen is eventually it will be when the vol will eventually dissipate. But it might be 5 years, and it might be significantly higher.
Yeah. Well said. Thank you.
All right.
This was fun.
Hope you enjoyed the episode, everyone. Thanks for stopping by. Please feel free to leave your comments, or even if you want to let me know topics that you think I should be talking about. You can find us on LinkedIn, Facebook, Instagram, and YouTube. Just search @Cresco Wealth Management. And last but not least, if you want to be up to date with our newsletters, our insights, and even our events that we host throughout the year, you can reach out to me directly. It's pretty simple. You can just go to our website, find me from there, crescowealthmanagement.com. Thanks again, everyone.